You have to start looking at rejection blocks when trading. Traders like Blake and Patty are already using them, and here is why. So let's first actually start by going over what rejection blocks actually are. So there are bullish and bearish rejection blocks. Okay, so a bullish rejection block is a bullish wick that traded into a fair value gap or intermediate low inside a fair value gap. And a bearish rejection block is the opposite. So it's a bearish wick that traded inside of a fair value gap or an intermediate high inside a fair value gap. So let me show you an example in the chart. Okay, so here on screen we have an example of a 1 hour bearish rejection block. You see how we have this wick inside of this hourly fair value gap right here and how it traded up into it? This wick that we formed is the 1 hour bearish rejection block. Rejection blocks are a great PDA array to have when you don't have a fair value gap you can tap into. Now let me show you why this key level is so strong. So we had an overall bearish bias for this day, but instead of waiting for these swing highs to get hit, we just used the rejection block as a confluence. Look how it taps perfectly inside this rejection block and immediately inverses. You can take IFEGs out of these rejection blocks as an added confluence. And now you can take the trade just like this on screen. In this case, we only used the rejection block as a confluence. We didn't have a fair value gap delivery at all. If you want to learn from me, I created this free course that has a 75% win rate. And if you comment course below, I will send you the link for free.